Hi everyone, hope you're all doing great. Welcome back to another video. In this video, I'm going to talk about some of the stocks that are in my watch list that I'm going to trade for the month of February series. I'm going to give you the chart patterns and what to expect on the upside and on the downside as well for each of these stocks. So don't skip the video, watch the video from end to end. You will be learning some amount of information out of this video. Also, if you are listening to me for the first time, my name is Manoj and I'm a trend follower trading in the market since 2009 and 10. I've been working in the US and Canada in liquidity risk, market risk and credit risk. Right now I'm in India. I've been like a full-time futures trader and I'm a futures trainer also. If you're looking for how to actually trade futures by gaining some knowledge, let us know in the number that is given. We will give you the details and we will provide webinars on how to actually trade futures. With that being said, let us get on with today's video. So all these stocks that I've chosen is based on chart patterns, support, resistance and then some seasonality. So today I'm going to go one by one and I'm going to discuss what to expect for each of these stocks. Of course, if there is overnight any fundamental shock in any of these stocks, then market is going to behave differently. So most of these stocks, whatever we are discussing, unless and until there is any outside interference, for example, a new tariff rate that is being put on India, then in that case, obviously the market is going to react in a different way, maybe pushing the stock down, breaking the pattern. As of now, whatever the chart that says like, it's bottomed out, there is more buyers and sellers. That is what I'm going to discuss in this video, and don't consider this as a buy call. Just because I'm trading, you don't have to trade with me. Always consider making your own analysis or talk to a financial consultant. Understand all the risk when you trade futures. Alright, so the first stock that I want to discuss in today's video is not Amber but Bajaj Finance. So what's going on with Bajaj Finance? Bajaj Finance, after the results, it went up to a high of 1100 and then it pulled back to 950. So what you see on the right hand side over here is the volume profile, which indicates the amount of stocks that has been traded over this period of time, and it says how many stocks has been traded. Whenever you see a small bar, it indicates there is a free fall or there is a sharp move to the upside. Whenever there is a big bars, it indicates there is a maximum amount of trading activity that has happened in that actual range. It could be sellers at one point in time and then it could be buyers. For example, when it went up, there could be all trading activity indicating that there is a strong consolidation. So this is where the consolidation is happening. So anytime the stock falls again to that level, right, it indicates there could be consolidation. Right now it has fallen to that level, indicating a consolidation. Not the exact rate that I want. My rate, when I say my rate, it's the biggest volume bar, which is 920. But then again, it could actually reverse from here. To which area it reverses, it again goes back to the comfortable zone, which is in this area, that is 1010. You can see a big bar over here, 1010 and 1020. Okay, so that is how market functions. Market functions in ranges with news, external support factors, macroeconomic factors, news that is like related to the company and all of that. So this is the first company. If it breaks down, how to actually manage? Either you can buy puts or you can sell calls or you can go short on the next month series, which is March. But then again, it all depends on how the market reacts during the live market. Right now we cannot say. As of now, the stock is actually taken a support and it can move up. And if I'm trading, I don't want to buy this in cash. I will be going long in futures. So this is the first company I have in my watch list. The second important reason for me to choose Bajaj Finance is actually the seasonality. Out of the last 15 years, 15 February, like 2025 February, 2024 February, and if you take the last 15 Februaries, 12 Februaries, Bajaj Finance has been in green. So this is a big indication that the stock has performed really well in the month of February. I'm not able to show this here. Let me go to the website and type Bajaj Finance. This is money control, free of cost. You don't have to pay anything to anyone. If you scroll down, there is something called as seasonality. So here is the seasonality, right? If I click this, it's going to give you this seasonality. So look at this. This is the February month, right? So this is the February month, and if you see, there is a red February 2024, and the last time it had red in 2018. And if I scroll down, 2013 and 2020, and out of like 15-16 Februaries, 4 or 5 Februaries, the stock closed in green, and right now it is trading in support zone, which means the probability of the stock going up into the February first 15 days is really high, right? So that is why I have taken Bajaj Finance as my first stock, which I will be trading on my personal portfolio for the month of February, right? So here the same thing again. This will be easy to some part, seasonality, and then if I add seasonality, you can see at the bottom here, right, the same data. There is no difference in data, but it will be a bit easier to see than in money control. You can see that, you know, the stock might actually run up to this level, which is 10. That is like 6% to the upside, which is the first stock. If it breaks down, I'm going to manage, but if it breaks down, it's going to come to 925 to 920. This is the first stock which is in my watch list. Most likely I'll be trading for the month of February. The second one that I'll be trading for the month of February for sure is Coforge. Coforge, you can see this is a self-explanatory chart. Again, if you see on the volume bar, these bars have heavy trading activity, indicating 1720 to 1730 has seen the large amount of activity over the period of probably 2 years, right? In the 2 years, you can see this is the largest bar. So whenever the stock comes to that point, people are buying or people are selling in large quantities if you compare it with the other areas. So that is the literal meaning of that. And better yet, it is actually reversing from that zone. And if you see IT companies, all the IT companies have actually gapped up on Friday. I don't know the reason. If you know the reason, let me know in the comments. So again, all of that is actually showing a bullish momentum in the stock. Which one? Coforge. If it breaks down, I'll be managing my futures from 1650. If it breaks down below 1650, which is this level, that is where I'll try to manage. I'll buy puts, I'll sell calls, or I'll go short on the next month series. Now let's go to the seasonality of Coforge. So this is the seasonality of the Coforge, and if you see from 2010 to 2015, there has never been a red February, right? And then there was one red 2016. After that, there is all greens. So and then this is COVID, understandable, and these are all like overvaluation factors. 2025 last year also it has closed trend. Since it is already in the trending zone, I don't think it is going to actually close at a red February. So that is also another reason why I'm actually gonna buy Coforge. Where is my profit target? This is my profit target. This don't have to be yours. Again, you have to make your own analysis on top of the information provided here. Don't consider this as a plain buy call. My target zone will be 1900, which is somewhere in this place. That is where I want to take the profits for this futures. So this is the second company on my list. The third company that I want to talk about is Keynes. Okay. So Keynes, I already have a position, right? I have a position from 4500. It's almost like, 2 months now. I've been like rolling over. I've been like closing the current month futures and then opening the next month, and my break even is at 4500, which is why I have drawn a line. And you can see the size of the position is 100 lots, 10,000 quantity, Jan futures, which expires on 27th of this month, which is after the Republic Day. Republic Day falls on 26th, Monday, and the next day 27th this contract expires, which mostly I'm going to close this and then move my futures to February series. Why? Right? Even though I'm at a loss, I'm at a big loss, my size is big, why I'm actually holding Keynes. Most of the bad news that is there in Keynes is actually discounted, and you can see that even yesterday there were some contracts renewed with the government of India, and every time during the budget there will be PLI schemes, there will be like AI chip related news and all of that, and even the Prime Minister last week has spoken something about AI related stuff, right? We want to manufacture, I don't have the exact news, but that's what I think, right? The government of India wants to actually manufacture the AI related chips, right, in-house. So this is one of the factor that could actually propel the stock. I don't want big rallies in the stock. Even if it goes up to this level, which is 4,500, 4,800, I'll make good amount of money because my size is really, really big. How I'm actually going to manage if it is going to lose, that is a separate story. As of now, I don't want to actually do something expecting the stock to go down and very next day the stock will reverse. So that is why I'm just holding very patiently. Okay, let's suppose I go short on next month, right? I sell February futures. There is a possibility that the stock might reverse the very next day, and actually if you take the Fibonacci retracements of this whole curve, it comes to somewhere this range. It can easily go up here and then pull back and then go up after the news, all of that comes into the market. That is why I'm not doing anything. I'm just rolling over and keeping the margins and waiting patiently for the stock to hit somewhere in this range, which is 4,800. At 4,800, all my lost points will be covered and I'll be making 30 lakhs in profits. So that is why I'm just holding on to this company. Okay, so moving on, the next company that I want to talk about again is Dixon. Right now I am bearish about Dixon because I even though I had a position and then I had to exit at this candle the moment it started to crack. So right now what is going to happen as per today's chart? Okay, so whatever we see, that is what we interpret. Max to max it can fall to here. If it breaks down this level, it can fall to here, which is 7,800. At 7,800 it becomes very cheap. The stock becomes really cheap considering the growth factor the company have. The company's growth factor has slowed down, so that is why market is reacting too much. But it has always been happening that whenever the market reacts so violently like this, it almost like sold off from 21,000 to 10,000, 50% stock price has been gone. That is when violently it starts to move up, even on a small non-bad news. So we have to be very careful. So I'm just holding on and I don't want to take a new position again. I'm just holding on to see at least one green candle on the daily. So there is no at least one single green candle on the daily for the past 2-3 months. So this is a short covering rally that happened on the December mid. If you skip these two, there is for the past 2 months there has been not single rally that has happened in the stock, proper rally. So everything has been like short covering 2 or 3 days rally and then it goes off in a continuous downward spiral. So that is why I'm not doing any long in this. I'm not going short also because the stock is like in no bands territory. I don't want to take a risk at this point in time. Okay, so this is also one of the stocks that I'm having in my watch list. I will trade when there is proper reversal is happening on the chart. The next company that is there in my watch list is Trent. Trent again, as it's looking like bottom out at least. If you look at this, there is a big chunk of trading activity that has happened around 4,000. So that is where the stock has come. And every once in a while there is news from the management indicating footfall issues, indicating store cannibalism. Store cannibalism is nothing but one store is eating the sales from a similar store. So if you have, for example, 2 Zudios close to each other, people, there is no new sales. So that is store cannibalism. Once in a while management says something bad about the outlook and then the stock actually cracks down. So this is what it has happened here, this is what it has happened here. And so I sometimes feel like trend management should not be talking at all for the stock price to perform. But then, right, if you skip this and if you see this from stock perspective, it looks like bottomed out, and most likely if it sustains this level, right, if it sustains this level for the next 1 week, I'm expecting at least the stock to touch this level, but I'm not trading. So that is very important. I'm not comfortable to buy Trent at all because of there's like so many external forces. Someday somebody opens another retail store and the stock is like gapping down. There is some management discussion. They say like footfall issues, the stock goes down by 6%, 7%. So I'm not comfortable trading futures in Trent, but at the same time I want to keep this in watch list and see how it actually goes up or goes down or whatever, sideways or whatever. Or I can buy calls and puts on both sides, 300 points 300 points straddle, and then see how it goes. So that is also one of the options. Not a big position, I'm going to take a small position if at all I'm actually trading. Now if we look at the seasonality, right, in January if you see the data, the seasonality has been like not too impressive, most of them are red, and February it's okay. So for last February it has gone down, but if you skip that, there are like 4 or 5 Februaries trend has gone down and now it is trading at a support zone. So that is why I have this in my watch list. If it reverses, the stock can actually run up to 4,600. So that is where the zones of the stock is. Of course, there has to be a lot of good news in the stock for it to just reverse 600, 700 points on the upside. So final company that I want to talk in today's video is Pidilite. Pidilite is actually having a good February. If you look at the seasonality before we go down to the chart level, so look at this. Pidilite hardly had any reds at all in February. Only last February it gone down. Most of the stocks have gone down in the last February. I don't know the reason, maybe because of tariff or something. But if we skip that, Pidilite has been most of the times closed in red. Now, what would be a good entry point for this stock? Let us go to Kite and see. So the good entry point, according to me at least, is 1450. So if the stock falls to this level by any chance, the next week I'm going to pick some futures, and where will by exit point, I will exit off at 1525, and if 1525 crosses, I'll exit off at 1550. But this will be my trail stop loss. Okay, so that is where my zones are, that is where I'll be trading. If it suppose closes below this point, which is 1425, I'm going to manage based on how the market reacts at that point in time. But looking at the stock, looking at the strength, looking at several times it has come to this level, I don't think the stock will actually fall below 1430. So 1450 is going to be my entry point. Let's see how it actually goes up. So what are the stocks that I'm going to trade? I already have Keynes. Then my first go-to preference will be Bajaj Finance, and then Pidilite, and then Coforge. So these are the stocks which I might be trading as a basket coming into February series. So I'll wind up my video here. If you have enjoyed this video, please like the video, share with your friends. I'll meet you all again. Thanks. Bye. Take care.